Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Art Group Holdings Limited interim report. Art Group Holdings Limited provides a range of services and businesses through its operations in China. The company's primary focus is on the management and rental of shopping malls and industrial parks. This indicates that the company offers property-related services to both commercial and industrial clients. In addition to these core services, Art Group Holdings Limited also engages in the operation of shopping malls and industrial parks. This suggests that the company has a hands-on approach to managing its properties, overseeing daily operations, maintenance, and upkeep. Overall, the key businesses and services provided by Art Group Holdings Limited include property management, rental services, and operational support for shopping malls and industrial parks in China. Art Group Holdings Limited market capitalization of $7 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Art Group Holdings Limited holds a significant advantage in their industry. Art Group Holdings Limited trades at a lower price-to-book ratio of -213.85 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 101% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company's financial performance can be identified through an analysis of various factors. On one hand, revenue growth is driven by several key areas. In the property segment, revenue increased significantly due to a 10.3% growth in the property operating segment. Additionally, rental income from leasing of properties contributed to revenue growth, particularly from Xi'an City and Zhengzhou Yinghao. On the other hand, revenue decline can be attributed to various factors. The company experienced a significant decline in revenue from external customers in the PRC, with a decrease of 19.6% compared to the previous year. Furthermore, property rental income decreased by $855,000, resulting in an 18.7% decrease in revenue. Moreover, the discontinued cargo aircraft charter business also led to a significant decline in revenue. Uncertainties surrounding U.S. tariff policies had a negative impact on cargo aircraft operations, further contributing to revenue decline. However, it is worth noting that these uncertainties are external factors beyond the company's control. Overall, the primary drivers of revenue growth or decline can be attributed to a combination of internal and external factors, including changes in market conditions, business decisions, and regulatory policies. The company's operating cash flow is a subject of mixed results. On one hand, several pages indicate positive operating cash flow, including net cash generated from operating activities increasing to $33,506 in 2025 compared to $1,648 in 2024. Additionally, the company has sufficient cash operating inflow to cover its next 12 months outflow and is generating a positive operating cash flow of $1,000. However, other pages show negative or unclear operating cash flow. For instance, page 16 indicates an operating cash flow of negative $65,999, while page 19 shows a net operating cash flow of $500,895. Furthermore, the company's property operating segment has reported a significant loss of approximately $63,690,000 in the interim period. In conclusion, based on the provided summaries, it is unclear whether the company is generating positive operating cash flow or not. the mixed results make it difficult to determine the company's financial health in this regard. The financial performance of the company has undergone significant changes in recent years. One notable trend is the substantial increase in net cash used in financing activities, which rose from $9,826 million in 2024 to $15,411 million in 2025. This indicates that the company has been relying more heavily on external funding sources. The company's debt level has also seen a significant surge, with net liabilities increasing to $35,710,000. This increase in debt is likely contributing to the higher interest expenses reported for 2024, which stood at $12,951. However, it is worth noting that interest expenses are not reported for 2025, making it difficult to assess any changes in this area. Overall, the company's financial performance suggests a trend of increasing reliance on external funding and rising debt levels, with potential implications for future interest expenses. The company's financial policies have been scrutinized in recent reports. One notable aspect is the absence of dividend payments. According to available information, the company has not paid dividends to its shareholders. This decision may be attributed to various factors, including a focus on reinvesting profits or maintaining liquidity. In addition to dividend payments, there is no mention of share buybacks in the provided reports. This suggests that the company has chosen not to repurchase shares from the market, which could have implications for shareholder value and corporate governance. That concludes the financial summary for Art Group Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.